Good morning, this is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. US futures edge higher after Wall Street takes a breather from the AI-driven rally. The Fed's Mary Daly says more cuts are coming, but says the central bank should move cautiously. Bloomberg learns Intel has approached Apple about a potential investment in the struggling chipmaker after locking in funding from Nvidia and the US government. And the US lowers tariffs on auto imports from the EU to 15%, cementing the terms of their framework trade agreement. Meanwhile, America sets the stage for levies on robotics. A little bit of caution settling into these equity markets over the last few days. A little bit of softness coming through across European stocks. By the end of the close yesterday, down around 0.3. A similar picture for US markets as well. Certainly question marks around how far the Fed will go, and a mixed response, of course, from those Fed officials. European futures right now pointing a little lower after the losses of yesterday. 2 straight days of losses right now on US stocks. FTSE 100 futures pointing down by 21 points. S&P futures after the downside of yesterday, again down around 0.3 on the S&P 500. Looking to modestly add around 0.1%, and a similar picture for the Nasdaq 100, looking to add 22 points. Let's flip the board and have a look cross-asset then. Part of the concern filtered through yesterday with a modest sell-off in treasuries. Right now, 4.13 on the benchmark 10-year, largely unchanged across US treasuries. Stability back, it seems, in the session today. 134 on the pound, up 0.1% versus the US dollar. A reminder from Bloomberg reporting on the splits amongst the members of the MPC between the BOE governor and Greene as well, both pointing to different factors that they're concerned about in terms of the labour market and inflation. There is division, of course, atop the MPC at the BOE. Copper holding at near highs, currently largely unchanged in the session. This is on supply disruption out of Indonesia. So we look at Dr. Copper for the moves there, but certainly a reminder of the tightness when it comes to supply on strong demand continuing for that metal. Brent at $69 a barrel, down 0.4% on oil. Currently a little softer in the session on Brent. Let's cross over to Asia right now, check in on how Asian equities are faring, what the Asian session is focused on, and bring in Winnie Su. Winnie, what are you looking at?
Yeah, Asian stocks pretty mixed today. A bit of a fatigue after these record highs, right? Actually, in the Hong Kong market, the typhoon has finally left. We are seeing a little bit of an upside here. And also in Japan, rising a little bit, driven by the gains in bank shares after, as expectations are rising, that the Bank of Japan will likely raise rates in October. And we also saw quite solid demand when it comes to the 40-year JGB auction that happened just a while back, signaling how investor sentiment remains quite intact amid this whole geopolitical uncertainty. Now, one sector that really stood out today, as you mentioned, Tom, is that copper-related sector. We are seeing that the miners are up across the board, and that's really because of how copper prices surged after Freeport-McMoran's Indonesia mining incident, and that raised concerns around the supply disruptions. So mining stocks, whether it's in Japan or in Hong Kong, we're seeing jumping some 10%. And while we talk about kind of the optimism around AI, we have to take a look at what's going on in the Chinese tech shares. Again, we're seeing HS Tech up 2%. So there's no cooling down in terms of the optimism for the China AI story. Alibaba yesterday jumped some 9% already after the CEO said that they're going to increase the AI investment. And today it's still up, right? And when you look at CATL, another one that I really wanted to draw your attention to, it's hitting another record high because of the strong demand when it comes to the outlook for battery, and it has now just overtaken Maotai to become China's third largest stock.
OK, well, from the drinks maker then to the maker of those batteries. And no let-up, as you say, in that AI theme over in China, even if it starts to cool in the US. Bloomberg Asia Equities reporter Winnie Su, thank you very much indeed with that update. Staying on tech, Bloomberg's learned that Intel has approached Apple about a potential investment in the struggling chip maker. Part of its comeback, of course, or its comeback push after the US government took a stake. Sources say the companies have also discussed closer cooperation. Apple was a long-time Intel customer, but then switched to in-house processors in the past 5 years, with its most sophisticated chips being made by TSMC. And the AI boom has made its way to the credit market after Oracle's jumbo bond sale as the software market ramps up its spending on the technology. Software maker ramps up its spending on the technology. Let's bring in Bloomberg's Valerie Teitel right now for the read across the linkages between tech spending on CapEx and the broader markets, particularly when it comes to credit. Val, how significant was Oracle's issuance?
It was a huge deal yesterday, the second largest corporate bond deal of the year, coming second only to Mars's massive $26 billion bond sale to finance a takeover. The deal was oversubscribed. The total orders reached around $88 billion. Tom, they tapped every part of the curve from 5-year all the way out to 40-year. But this is really starting to beg some questions over this massive gap of funding, just how the AI boom is going to finance it. Morgan Stanley did some very interesting analysis of where the boom in credit could be seen. If we flip the board, Morgan Stanley sees that most of the spending will be covered by the cash flow from hyperscalers, nearly $1.4 trillion to cover the total nearly $3 trillion of CapEx that has been pledged. But they see a decent boom coming into private credit. $800 billion in the next 3 years could be raised via private credit. Now, given the size of the U.S. private credit market right now is around $1.5 trillion, that is a 50% expansion of the private credit market. They also see it going into other private vehicles such as private equity and venture capital. But this is a very interesting time, Tom, to be thinking about just how these companies are going to be raising this financing, and have they set an impossibly high bar for themselves in order to raise this funding in the next few years. To really try to put this into perspective for you, Morgan Stanley is saying they need to raise around $1.5 trillion over the next 3 years. The U.S. government in 1 year borrows around $2 trillion. So they are looking to borrow as much as the U.S. government to fund this AI CapEx spending in the next few years. Now, this kind of thought has been weighing on the equity market this week. Yes, we're down, but just slightly in the last 4 sessions, down just around 0.25%. But Tom, this is now looking like the worst week for the equity market in 2 months. It's really gone against the weak September seasonals this month. To have such a strong September is really quite an outlier.
OK, that's some remarkable stats in terms of the borrowing that's going to be needed to build out that infrastructure for AI and the comparisons with the US government. Bloomberg's Valerie Teitel, thank you very much indeed. And the softness, of course, that we've seen filtering across the S&P 500 in the last couple of days. Part of that was down to concerns about where the Fed goes, of course, and how much conviction there is that the Fed really is leaning into this dovish mode. How many more cuts will be coming through? Well, we will bring you an interview on that front with new Fed Governor, of course, Stephen Meyer. He's called for multiple 50 basis point cuts. That conversation kicking off at 1 p.m. London time, certainly worthy of your attention. Now, the US has formally cut tariffs on EU cars to 15%, with the lower rate backdated to the 1st of August, when the agreement was reached. Let's get more from Bloomberg's news desk editor Balazs Pence. Balazs, this is something that clearly the European automakers and the industry had been waiting for, so good news for the EU. How clear is the path ahead then? How significant is this deal? Is it completely locked in? Can they now breathe a sigh of relief?
Well, this is certainly a relief for European automakers who have been seeking some sort of stability for the market and have been seeking a sign that they can go ahead and with their planning and kind of know what sort of business environment to expect when it comes to the U.S. market. So it is something that the EU has been pushing for ever since Donald Trump announced those tariffs. There are a few sticking points still in that trade relationship. steel and aluminum being part of that, where the EU has been pushing for lower tariffs. They floated an idea about quotas for European exports. Germany, for example, has been very vocal about trying to get something done there. It doesn't look like they have gained a lot of traction with the US side, but getting this deal done, getting this in the books and getting this cemented does help the auto industry and does show that the EU has been able to achieve some of the most favorable rates within this new trade and tariff environment globally.
Okay, so that's one hurdle out of the way, Balázs, but then the Trump administration throws another hurdle in the way, it seems, threatening tariffs on robotics and medical devices. What have they been saying? Why?
Well, this is an interesting one because these sort of investigations are often the precursor of sectoral tariffs. We've seen that, for example, in the pharmaceutical industry. We've seen that those types of investigations ongoing in the semiconductor industry. This was the sort of investigation that laid the groundwork for auto industry tariffs as well. And what's important about these tariffs is that these are different from those kind of country-by-country tariffs which are being challenged and which are being decided by the Supreme Court whether they are legal or not. This is a different process, and these can stay even if those tariffs are found to be unlawful by the Supreme Court in the U.S. So this does seem to lay the groundwork for another sector where tariffs might be coming in. This would cover a lot of exports that companies use to bring in the machines for their plants, a lot of presses, a lot of that sort of equipment. So it does look like there's yet another sector where we can count on some level of uncertainty.
Okay, another wrinkle in global trade. Bloomberg News Desk editor Balázs Pence, even as the US removes those tariffs, or at least edges them low, down to 15% on EU autos. Balázs, thank you. Here's what else to think about in the day ahead then. We get the SNB, the Swiss National Bank, rate decision. That's at 8:30 a.m. UK time. We will break that for you. Of course, all sorts of implications with a nation that faces far higher tariffs from the Trump administration than the EU, and we know negotiations, at least the Swiss, are attempting to negotiate that away. So there's implications for the currency at a time, of course, when the inflation dynamics are starting to adjust over in Switzerland. So we'll break that for you, of course, the implications. We'll watch the Swissy on and in the lead up to that decision. At 1:30 p.m. UK time, we're going to get US jobless claims. So this week, US jobless claims giving us more detail on the labour market amid concerns, of course, amongst some Fed officials that the labour market is starting to deteriorate. And then, of course, you have PCE on Friday. So you get both labour market data and inflation details this week at a time when we know FOMC officials are split in terms of where to put the emphasis on those two considerations. And at 2:45 p.m. UK time, there will be an address at the United Nations General Assembly by Palestine and their representatives at a time, of course, and on a week when France, the UK, Canada and others have formally recognised a Palestinian state. You get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. On the terminal, front and centre is this intriguing story about HSBC and its use of quantum computing power to better predict bond prices, a potential Sputnik moment, according to executives at HSBC. Coming up, Ukrainian President Volodymyr Zelenskiy issues a warning to Europe at the United Nations General Assembly. We'll bring you that speech and the context. Plus, as I mentioned, HSBC beating its Wall Street rivals by deploying IBM's quantum computer in a world first. We have the details later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Ukrainian President Volodymyr Zelenskiy has urged the European Union to provide Moldova with funding and support for its energy sector. Zelenskiy gave a warning in his address at the United Nations General Assembly.
We have already lost Georgia in Europe. Human rights and the European nature of the state system are only shrinking there. Georgia is dependent on Russia. And for many, many years, Belarus has also been moving toward dependence on Russia. Europe cannot afford to lose Moldova too.
Well, for more, I'm joined by our Europe correspondent, Oliver Crook. Ollie, Zelenskiy's warning then on Moldova, coming, of course, at a time when President Trump has apparently shifted his stance on Ukraine. Of course, he can shift it back again, given the nature of this US president. But why is the leader of Ukraine focusing in on Moldova?
So he's focusing in on Moldova because they're holding parliamentary elections this Sunday, just a couple of days away. And if you look at the polling, it's pretty razor thin in terms of the sort of pro-Russian side of things. And then the current president's group that is going up against that side, really coming in with a couple of basis point percentage differences, with a lot of sort of external factors that are involved as well. We had a great story out a little bit earlier this week about a report that we had about seeing documents about basically the Russians' plans to try to sort of destabilize this, try to encourage their side of the political aisle. And as you know, Tom, this is a very familiar story for many political stories across Europe, but particularly in Eastern Europe. So something that, of course, Ukraine is very conscious of, because Moldova is on the other side of Ukraine. You have Russia here to the east, and then Moldova in the sort of southwest of the country. So something that is very present in the mind of Volodymyr Zelenskyy and very present in the mind of the Europeans, who have been trying to attract more and more of these countries into the orbit of the European Union. And Maia Sandu, the president of Moldova, has been bringing the country closer and closer and closer in that direction. There is now the strong magnetic pull on the other side from the Russians, and trying to sort of pull them in the other direction. And this really speaks to the situation in so many of these countries, Tom, where you have this sort of tug of war between Russia and the European Union. And again, the European Union trying to bring more and more countries into the blocs at a time when within this bloc itself, the European Union having a great deal of issues with nationalism and all other kinds of issues. So again, a key election to be watching this Sunday.
And we mentioned Trump's change of rhetoric, change of tone on Ukraine and Russia. Is he backing that up with additional pressure on Russia and more support for Europe? And if not, why not?
And so we're talking about sort of familiar patterns, what we're seeing in sort of Eastern European politics. There's a familiar pattern that we've seen and become very sort of aware of within American politics, which is something shocking happens, something nobody really expected from the Trump administration, something that feels very significant. And then 24 to 48 hours later, the dust is settling and you're like, actually, what does this mean? What does this actually mean for Europeans? And that is what they're trying to figure out now. So Trump's rhetoric has shifted on Ukraine. We should not undersell how significant that is, how significant it feels to have the United States on your side for the Ukrainians and the Europeans. But what the Europeans now need to do is to turn that sort of good feeling into some actual positive momentum, into actionable points. And one of the most actionable things that has happened over the last week is the Trump administration pressure on the Europeans to basically get rid of the Russian LNG and gas. That is something that they now have moved forward with. They moved it a year earlier, but it's still a year away. Maybe the United States could be used to put pressure on Hungary and Slovakia to get them off of the oil and gas that is still coming from Russia. But again, that is a sort of small part of the conversation there. There is also the question of weapons now. Will the Europeans be able to mobilize more money? Because now we know that the United States is willing to sell those weapons. Will there be new funds? Who is going to back that? So I think that that is really the big question. And of course, to say nothing, Tom, of the fact of the big sort of debate that is now going on in NATO and how to deal with these air infractions. We've had basically three different models. You had the Polish saying anything that comes into our airspace, we will shoot down. The Estonians are taking a much more measured approach, saying we need to be sort of strong, but we don't want to sort of instigate too much. And the Germans saying, actually, you're just playing into Russia's hand. You need to be much more cautious and much more skeptical of all of these sorts of things. Again, to Trump sort of adding an additional sort of interesting element here, saying that basically the Europeans should be shooting down Russian jets. But again, coming back, stepping 48 hours after those comments to actually figure out what this means from the United States and how the Europeans should action it. We should say that the Europeans, as welcome as these sort of comments are very skeptical that this is something that they can hold on. What they want to do is use Trump momentum when they've got it, but not rely on it for the future.
Yeah, and that question that overhangs all of this, doesn't it, as to whether or not Trump ultimately does have Europe's back if tensions with Russia escalate further from here with those incursions. Bloomberg's Oliver Crook, thank you very much indeed with the latest. Now, some other stories making the news this Thursday. The US is preparing a $20 billion swap line for Argentina. and may buy the country's bonds, providing support for President Javier Milei as he works to regain investor and voter confidence. US Treasury Secretary Scott Bessent told Fox News the financing is intended to assist Milei ahead of next month's midterm elections. Democratic Senator Elizabeth Warren has described it as a bailout for a Trump political ally. US envoy Steve Witkoff is predicting a breakthrough in the Israel-Hamas war in the coming days. That's after President Donald Trump presented a 21-point plan to regional leaders in a meeting at the United Nations General Assembly. Witkoff didn't detail the plan, but said it addresses Israeli concerns as well as the concerns of all the neighbours in the region. Politico earlier reported that Trump promised Arab leaders in the meeting that he would not allow Israel to annex the West Bank. Coming up, will the Swiss National Bank avoid dropping rates to negative? We'll do a preview for you. That decision's at 8:30. We'll set you up for the SNB decision. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Swiss National Bank expected to hold rates at 0% today after having cut six times in a row. The Swiss franc's strength is a pivotal factor, of course, affecting future decisions, along with domestic inflation standing at 0.2%. 0.2% inflation in Switzerland. Bloomberg's economy and government reporter Bastian Benrath-Wright is in Zurich with a preview for us. What are the chances then, Bastian, of a surprise from the SNB?
Good morning. Well, if you ask economists, they are pretty low. We polled more than 20 economists, and just one single one said they expect a cut to negative 25 basis points. However, obviously, that being below zero would be a massive step, the reintroduction of negative interest rates. So really, since everybody is expecting that hold at 0%, it's a very binary decision today. So either it's going to be rather boring if they hold, if they do what everybody expects, or it's going to be very exciting because it would be the first time negative interest rates are reintroduced in the world after the 2008 crisis and the following aftermath, the euro crisis and so on. Since then, the SNB was one of the last to exit negative rates in 2022, almost to the day 3 years ago. So it's not, for Switzerland, it's not that long ago. So the question is, will they really want to go there? We'll see at when they have the decision in not so long a time.
OK, that could be a new chapter, or at least returning to an old chapter, but a new chapter in the current regime. Meanwhile, Bastian, the tariff impact, we're reminded, of course, that Switzerland faces almost 40% tariffs. What is the tariff impact on inflation?
Well, the question is what will happen. There's multiple channels on which the tariff goes on inflation. So for once, there's obviously growth. The growth forecasts for next year have just been slashed if there's no resolution to this tariff spat with the US found. And obviously, if growth goes down, inflation will go down, which is already very slow. And on the other hand, you also have the strong franc, because actually since April, since Donald Trump has unleashed his tariff onslaught on the world, investors have been pushing money into the franc and have been pushing the franc up, and that is also weighing on inflation. So either way, inflation is it's weighing on inflation on different channels, and at 0.2%, it's already pretty low in Switzerland. So the policymakers of the SNB definitely have to watch that.
Bloomberg's Bastian Benrath-Wright on what could be a very interesting day in Switzerland. Joining us from Zurich, Bastian, thank you very much for that preview of the SNB decision. And stay with us for the SNB President Martin Schlegel's briefing after the rate decision. We will have an interview with him later in the day. Coming up, we're going to be speaking to the CEO of the asset manager ICG, which raised more than €3 billion for a European infrastructure fund. That discussion is coming up. This is Bloomberg. Good Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. US futures edging higher after Wall Street takes a breather from the AI-driven rally. The Fed's Mary Daly says more cuts are coming, but she says the central bank should move cautiously. Bloomberg learns Intel has approached Apple about a potential investment in the struggling chipmaker. That's after locking in funding from Nvidia and the US government. And Spanish Prime Minister Pedro Sanchez says he will run for re-election in 2027. That is despite polls showing his Socialist Party will have a hard time winning a majority in Parliament. We bring you our interview with the Spanish PM. Before that, though, let's get to the markets and a check. Given the relative softness that we've seen, a bit of a cooling of the appetite around the equity story, of course. Still, global markets at close to those record highs, but 2 straight days of modest losses for US stocks. European futures pointing a little lower by 0.1% after closing down 0.3 yesterday. FTSE 100 futures here in the UK pointing lower by 21 points. S&P E-minis then, after the drop of 0.3 yesterday, pointing marginally high by 0.1%. Nasdaq 100 futures looking to add 12 points. Let's flip the board and have a look at treasuries, but also copper as well on those supply constraint concerns. The benchmark 10-year at 4.13, close to 4.14, largely stable across the treasury market today. The pound at 1.34, splits amongst the BOE. We've heard that from Andrew Bailey and Megan Greene, both emphasising different aspects that they're focused on. Megan Greene suggesting they could skip in November. Andrew Bailey saying there are more cuts coming. Copper at 10,300, and this on concerns about those supply constraints and disruption out of Indonesia and one of the mines there. Brent at $68 a barrel, close to 69, down 0.5%. Now, earlier this month, the alternative asset manager ICG raised more than €3 billion for its second European infrastructure fund. ICG said there was significant surge in demand from investors in North America. Let's find out how it will be invested and bring in opening trade anchor Kriti Gupta, who is at the IPEM Private Capital Conference in Paris. Kriti.
Tom, it's a fascinating time to be here, not only because I've got the best assignment in Paris, but because private markets are really juicy markets right now, especially in Europe. We've got one of the key people, the key players involved, as you just said, ICG CIO and CEO Benoit Durteste joining me right here, overseeing about 125 billion of assets under management. So we thank you so much for your time this morning. Benoit, we're here in Europe. We're here in Paris, the beautiful city of Paris. There's a lot of hype in Europe right now. A lot of international investors, especially from the States, want to deploy their money here. And they're attaching that reason to the massive amount of fiscal spend coming out of the government and encouraging investment environment, perhaps. How long does that stick around?
Well, I think probably for quite some time. I mean, if you look at the fiscal programs that a number of governments have put in place, and think Germany, that's the largest one, that's at least a 10-year program. So this is a 10-year horizon on that investment pace. And also more broadly, I don't think it's just that. I think it's, people are just, they're assessing risk and they're comparing risk. And suddenly, Europe looks, oddly enough, quite stable. There may not be, you're not thinking massive growth, but you're also looking at there are a lot of buffers to protect that growth level on the downside. So that makes for a relatively favorable environment for investment.
When it comes to the environment for investment, though, because there's so many investors coming to Europe right now, trying to get that exposure to defense, AI, energy security, the many themes we're watching, how much of that increases and affects the valuations that you're seeing in the private markets?
It hasn't yet.
Will it, though?
So it may, because historically you've seen valuations were typically higher, sometimes much higher in the US and Europe, so there could be a catch-up. It's possible. I'm not seeing it yet. I'm also a bit more cautious on, I think those flows of capital are coming into Europe, but they need to find the right place in which to invest, and that takes time. It's not as though they're suddenly awash with money. So it'll take time to walk it through the economy and possibly valuations as well.
Well, let's talk about one of the key factors in that, and that feels like the geopolitical volatility that's swirling around, certainly affecting some of the capital markets, affecting the exits that we're seeing. There's a thought here that there has been a real glut of exits for about, I want to say 2 or 3 years. Correct me on that if I'm wrong. But a lot of that in the recent months coming out of just geopolitical volatility and uncertainty in the investment environment. In your perspective, where do the capital markets stand right now?
Yeah, I think you're right. I mean, that's the correct assessment. It's been 3 years. Actually, we're going into the fourth of a below normal levels of general deal flow in the buyout space and exits as a result. Hasn't moved. I mean, if you've looked at the reports for the first half of the year, it shows it's flat on the previous year, maybe slightly down, and some of that is linked to the geopolitical environment, but it's also linked to a bid-ask spread on valuations that hasn't yet fully converged. It will over time, but it's a big overhang, and it probably will take a few years before everything is worked through the system.
So if you don't do the traditional IPO as an exit, are there other ways to find that?
Sure. I mean, there's been a lot. There's been a resurgence of exits to corporates, to the industry, which hadn't been that much the case before, and so you're seeing because a lot of the industrial players or corporate players are actually quite cash rich, so you're seeing them make a move and take advantage of this environment to acquire, and so that's becoming an exit path as well. And in Europe, unlike the US, the IPO route has never been the major route for buyout exits in Europe. Maybe it will in the future, but I think for that you need stronger capital markets and maybe a more cohesive European capital market, which I believe all governments are trying to work on, but it's taking some time.
Well, Benoit, about a year ago, Bloomberg was right here at this conference, and what was kind of the sound in the room was this idea that you are seeing GPs facing a lot of pressure on the exit front from their LPs. Sure. And the thought at that point was, if the IPO markets or the capital markets broadly stay frozen, where does that money go? Since then, we've seen a real, specifically in the States, this idea of democratization and access to private funds show up. Does that alleviate some of the pressure around exits?
I'm not so sure, because I don't think it's a question of capital. The capital is there. There's capital available. Actually, some people are saying there's quite a lot of capital sitting on the sideline, particularly for private equity. So the issue is not access to equity or debt, for that matter. The debt markets are quite hot right now. It's more of a question of, are the right investments there? Is there the right balance given the economic environment and the right valuations for people to move and proceed? There is deal flow, not like the market's completely frozen. There is deal flow, but not the same level of deal flow that you saw 4 or 5 years ago.
Yeah, kind of dipping their toe into the market, perhaps, if we're looking at a resurgence.
Choosing the best deals first and making their way through that overhang of buyout deals.
Spoken like a true PE investor. Benoit, talk to us about the interest rate environment here. We're starting to see a massive shift to dovish territory in the States. The ECB has already been cutting earlier this year as well. Does that make deal making better, or should we be reading that as concern around a slowdown in the economy? How do you think about that?
No, I think in Europe it's been relatively stable. It's come down much faster, and it's now at a relatively stable rate. Inflation is relatively low. I mean, in France it was at its lowest this summer in a long time. So you're actually in a relatively stable environment, that's conducive to deals. At least that's not what is preventing deals from getting done. And the level now, yes, it's not the zero or even the negative that we might have seen a few years ago, but you're sorry, early in the morning, but you're at 2%, so it's not, this is not something that's preventing deals from getting done.
A final question to you. We're here in Paris. There's a big question right now about the French investment landscape, specifically as we see a government that's kind of still trying to find its feet. We're talking about the idea of a wealth tax being imposed as well. How are you approaching investing in France?
I mean, yes. I mean, but there's always been movement and noise in French politics. But if you look at what's been happening, for the past several years now, there's been actually quite a lot of effort on the part of the government to make France more attractive for investment, and it's worked actually. You've seen significant inflows into France, so that has worked. The noise around the various politics, wealth tax is not new, and that's not a new debate in France. We had one actually for a while, and now there's a tax on real estate, which is a different type of wealth tax. So this is not new. That's not what's going to stop investment. We've been investing in France for 36 years. We've seen a lot of movement and government changes. It's always been for us. It's always been a really attractive country in which to invest.
All right, we look forward to see how that all pans out. Benoit Durteste Durteste there, joining me here in Paris at the EPEM conference. He, of course, is the CIO and CEO over at ICG. Tom, back to you.
Kriti, great conversation. Thank you very much indeed. Opening trade anchor Kriti Gupta, of course, who will be continuing these conversations from EPEM throughout the next hour. We're going to be hearing from leading voices from AXA, KKR and Brookfield. So stay tuned for those interviews. Talking of interviews, Spanish Prime Minister Pedro Sanchez says he will run for re-election in 2027, despite polls showing that his Socialist Party would have a difficult time winning a majority in Parliament. He announced his plans to Bloomberg News Editor-in-Chief John Micklethwaite.
I will do it for sure. This is something that I have already spoken with my family and with my party, and if they allow me, I'm confident that we can repeat a majority and to keep the work ahead. No, but let me add, coming back to migration, that the dilemma that all Western societies we're facing is whether we open up and grow, or we close off and shrink. This is the real dilemma that we need to face. So the challenge that we have within the European societies is how do we integrate this migration?
Do you think it's easier in Spain because you get a lot of people from Latin America where everyone speaks the same language? That's at least part of the argument why you might have been better.
So when you listen to some center-right parties and the far right, they are saying, no, well, we need to expel all these migrants coming to our... Okay, so what we do with demographics? Because either you have family policies?
Yes.
Plus migration, but they don't propose anything in these two policies. No migrants and less welfare state, and therefore less family policies. And that means social services, wealth, healthcare, social security, and so on and so forth. So what I'm trying to say is that if we don't have this contribution of migration, what we will face in the coming years in Europe is that we have a stagnation. We won't have the capacity to grow, and therefore there will be more cuts in our welfare state. So this is something that we need to explain to our citizens, that if we articulate a positive migration policy, that would be for the good of the Europeans and the Western societies. So just to give you a figure, 94% of the total migrants that are living nowadays in Spain came from regular, let's say, systems, and they came on legal basis. So we're talking about only 6%. And this is the reality. So I think that we need to fight and to give a positive, let's say, message about the contribution of migration to our societies and to our prosperity.
Well, that was Spanish Prime Minister Pedro Sanchez. Coming up, Quantum's Sputnik moment. We have the details about how HSBC is using the technology to beat rivals. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. HSBC says it has achieved a world-first breakthrough in deploying quantum computing in financial markets. The London-based bank used IBM's quantum processor to attain a 34% improvement in predicting bond trade prices. Let's bring in Robert Lee right now, senior analyst at Bloomberg Intelligence, for the details on this apparent breakthrough and what it could mean for banking. So, Rob, the head of quantum technologies at HSBC, telling Bloomberg he sees this potentially as a Sputnik moment for quantum.
Yes, I did see that. I think that's an interesting choice of words, and I think it's a very interesting development. But again, if you take a step back, any innovation, any new technology sort of follows a continuum, really. It sort of starts with that Archimedes moment in the bath, the flash of inspiration. Then it goes into the research phase and then through to development and ultimately commercial deployment. So the reason I explain that is I think quantum computing is still very much at the research phase. So this is very much, a very interesting development. But I suppose, again, looking at the headlines and HSBC's announcement, what we don't know is if what they've achieved is repeatable, and is it scalable, and is it ultimately deployable at an affordable cost. So, for example, if you were to build a quantum computer in your living room, you would need state-of-the-art equipment that's probably only found in IBM labs or, the labs of Imperial College and the like. It's incredibly complex, incredibly expensive. For example, you need to lower the temperature of these things down to literally very close to what is called absolute zero. You need huge setups, you need superconducting technology. It's really, really difficult. So I think what we're seeing is an interesting step along the research path, but the commercial deployment of these things remains many, many years away.
OK, so you can't just put one of these quantum computers next to or on a trading floor and expect that magic happens. Given all of those questions and all those caveats that you underscore for us, Rob, what is your sense, what is your understanding as to when we start to get real practical applications for quantum?
Right, in my mind, keeping things very simple, you've probably heard of fusion power. These are power plants that are trying to replicate the conditions of the sun. If scientists and developers can crack that problem, then in theory it would solve all the world's energy needs. In theory, it's unlimited power at a very, very low cost. Now, that is something really to gun for, something to aim for. Quantum computer is similar. These are two technologies with massive long-term promise, but they face considerable technological barriers, and we're nowhere near achieving commercial deployment on either of them. So again, at the research lab phase, businesses should continue to develop, but it goes back to the premise of risk-reward. The promise and the reward is potentially huge, but the risks and uncertainties relating to those, you need a real, Nobel Prize-winning development, and so trying to predict that is next to impossible. Will it happen in the next year, 2 years, 5 years, 10 years? Who knows? So very, very interesting technologies, both of them, but based on what we do know, based on the facts, the commercial deployment of these technologies remains pretty distant, I think. That's a rational way to look at it.
Yeah. OK, no, that's really interesting in terms of how to frame the timing of this and all the question marks over that. Rob, you were there in Hong Kong. To what extent is quantum computing and the race towards that end goal, whatever the time frame is a race between China and the US, or at least China and the West? And where does China stand? To what extent is this a geopolitical story as well?
Well, yeah, that's a very interesting question. It is, and if you look at China's strategic objectives, quantum computing is one area that the government has outlined of being of national importance. But again, it very much remains at a research phase. It's government labs, private labs who are pursuing investments. Again, as far as I'm aware, there are no deployable quantum solutions in the China market at the moment. So absolutely, given their vast scale in resources, in a way, it is a bit of a two-horse race, again, between the US and China. But again, let's not forget people in Europe, people at Imperial College and elsewhere. That there is a global development going on at the research phase at the moment.
OK, Rob Lee, really fantastic insights. Senior analyst at Bloomberg Intelligence on this story around HSBC and the uses of quantum, at least in one specific area, and the findings of that. Now, some of the stories making the news this Thursday. Splits within the Bank of England are on full display, with policymakers voicing differing views on interest rates. Governor Andrew Bailey said there was further to go on rate cuts, citing consumer caution and risks from a weakening labour market. Just hours later, external member Megan Greene proposed skipping a cut in November. And UK car manufacturing has dropped in August, with output falling 10% from a year earlier, including commercial vehicles, which fell 73%. That was the lowest production for August since 1956. A cyber attack at Jaguar Land Rover has brought production to a standstill and is set to make things even worse for the country's beleaguered auto industry. The FT is reporting that Jaguar will be shouldering the full bill from the hack as it doesn't have cyber insurance and could end up costing the car maker billions of pounds in lost revenues and profits. Meanwhile, European car sales rose in August, with new car registrations rising 4.7%, with Germany and Spain gaining more than 5%. Consumer appetite for electric and hybrid models is driving up demand, but sales here in the UK and in Italy dwindled. And it's not good news for Tesla, once again, seeing sales drop 22%. Meanwhile, BYD continues to outshine, more than tripling deliveries. There's a lot more coming up. Stay with us. This is Bloomberg.
So I wouldn't really characterize the labor market as weak.
Okay.
The unemployment rate is low, especially in many states like Utah, very low. The people are finding jobs. There's, wage growth is still expanding at productivity plus inflation. So you have a sense that people are moving and doing things. But what is true is that it's not as speedy as it once was. So if you think 3 years ago, it was what we called frothy, then it got to healthy, then it got to solid. Now I'd say it's sustainable, but I do not want to see further softening.
The Fed's Mary Daly there on the labour market of the US at a time, of course, when FOMC officials, we know they're divided in terms of where to put the emphasis on the concerns around the labour market or concerns about potentially a pickup in inflation, which remains, of course, on a headline basis, still well above the target at around 3%, the target of about 2%. All of this filtering into the conversation around the equity story yesterday. The S&P 500, 2 straight days of modest losses, but it does seem that the uncertainty over the path ahead for the Fed is one of those factors. We will get more detail on both the labour market today with US jobless claims and then inflation with PCE tomorrow as well. So both sides of those debate will be fleshed out in the next 48 hours. We'll see what the next catalyst is for the S&P 500, whether it is that data. Let's flip the board and have a look at copper, look at miners at the open as well. Still near the highest level in about a year. There's some supply disruptions over in Indonesia, so keep an eye on Dr. Copper this morning as well and how it ties into the UK miners. The opening trade is up next. Stay with us. This is Bloomberg.